Well, we've been in conversation with a number of companies to understand what the GST cuts are going to mean for the companies and for the individual sectors. And you're putting the spotlight now on the auto ancillary space. Sunil Bohra, Group CFO at Uno Minda, is with us now. And of course, our three talking points are the overall impact of GST cut on auto parts, specifically on the company. What is the impact on volumes and margins? And then what do these cuts mean for EV adoption? Because the tax differential between ICE and EVs reduces with the kind of cuts that have been announced. So let's go step by step. Thanks very much, Sunil, for joining in. So let me start right there. First of all, how much of your, in terms of by revenue, how much of what you were producing was in the 28% bracket, which now comes down to 18%? So how should we start understanding the impact on your company and what happens to the existing inventory in the pipeline?
Yeah. So starting with your first question in terms of the products GST 28 versus 18. So large part of products were actually in 28%, which will get into 18%. But because we are primarily into a B2B business, which is almost 90% of revenues come from the direct OEMs. So there you won't see any impact because GST, we all know, is a pass-through. So from that perspective, there is not going to be any impact. But yes, from a B2C perspective, which is the aftermarket segment, which is almost 9-10% of our revenues, definitely their prices will come down in line with the tax cuts. And this, we do hope that will bring in some sort of consumption. But it's a little early to comment because the consumption which we see in aftermarket is primarily a need-based consumption where you want to replace products which you need to. And you don't just replace like that just because taxes have come down. So you may not see any significant impact, but yes, it will bring the prices down in the B2C segment. Large part, 90% revenue B2B, as I said, no impact.
And how is the implementation going to be carried out? My second part of the question was just to understand the technicalities of it. How do you mark your current inventory? Because 22nd onwards, the tax level will be lowered, right?
Yeah, absolutely. So from inventory perspective, obviously they are currently carried at cost only. We don't carry including GST. So whatever GST you pay, that is anyway taken up as an input credit. So that lies a credit in your GST account, and the new revenue which happens post 22nd of September will happen at 18%. So from a pure B2B perspective, definitely it's not a significant impact other than just changing your rates.
It's pretty smooth, yeah. Okay, got it. So the transition for you remains very, very smooth. Yeah. 9 to 10% of your business is B2C, and that's where we need to see if there can be a further leg up. Got that.
All right. Hi, Mr. Bohra. Good to see you in, sir. So clearly, this will spell better times for the way ahead. But a quick question, does the GST reduction impact your pricing competitiveness in comparison to imports? Is there a threat of imports?
Not really, because when you import, there is a separate custom duty or the taxes plus the GST. So from that perspective, we don't expect any significant impact because when we sell, obviously we sell at cost plus GST, and when you import also, you have to pay similar taxes, which you can avail the input credits.
All right. Now the hope is that demand comes back. But what were your observations for majority of the second quarter? Was demand okay? Was it faltering a little bit? Many on the street believe that, tariff or not, there were some measures that were needed to be taken internally, and that's been taken. So what is your analysis of demand?
So from our perspective, our demand is primarily to our end consumers, and that has been on the trot as per the annual guidance and the month-on-month guidance which we get from our customers. So from our perspective, whatever components get into vehicle manufacturing, there has been negligible, I would say, no impact or no meaningful impact from this rate transition, because we all know because of this anticipated rate cuts when it was announced to when it is impacted, there has been some deferment. Maybe people would have chosen to defer their purchases for the time being because of this anticipated benefit. But despite that, our customers have been continuing the production because it was primarily deferment for a few weeks and it is not seen as any significant downside. In fact, we are expecting that post this rate cuts in line with the industry, we do expect that the demand should go up. Now, how much it will go up, I think everybody's in like wait and watch mode, because this definitely brings the prices down, as we all know, significantly, and affordability definitely increases. So government has done multiple actions, we all know, right? Leaving more hands of money in the taxpayers' hand by reducing the tax rates or the 12 lakh rupees of tax exemption. Then now we had these rate cuts by RBI in terms of interest rates. Now we have these GST cuts. So affordability definitely has improved on various counts. So overall industry is very, very optimistic.
Sunil, hi. Morning. There is the tax cut here. There is indirect tax hike in the US. A lot of these one-offs. But at a fundamental level, can you give us a sense of how business is progressing? What's happening? How's demand otherwise on a steady state basis across your product categories? What is the direction of travel?
Prashant, we continue to have our same trajectory. There is no hiccup. In fact, there are positive signs. Industry is preparing for the next leg of significant growth. We all know all our customers are expanding, and so we are. We have almost 12 new plants which are under construction, and we are quite optimistic that the growth momentum of the phase currently we are in, that is here to stay for a quite long time. So from volume perspective, yes, they have been broadly in line with what we have been estimating. And from 22nd of September, we are all gearing up for meeting our customers' demand should there be an increase in end customer demand.
Many of these OEMs have already passed on, right? Effective immediately. They're not waiting for the 22nd.
Right. You're right.
So in that sense, I mean, you should be hearing from these from the OEMs. I mean, now, in the sense, right? Of course, depending on what they are seeing on the ground after these price cuts.
Yeah. So that's what it's a little early to comment what they're seeing on ground, because to pass on the message till the end, it takes some time. But as I said, there has been no impact on volumes because of this anticipated cut post 15th of August. And our customers have been sort of building up inventory. And from that perspective, our operations have been going in a very steady, smooth way.
So all things put together, Sunil, this year, what, 20% growth? More than that? Less than that? Teens?
Very difficult to say, but I can tell you that in the first quarter, we all know industry grew by a couple of percentage points, and we grew by almost 16%.
Yeah.
So obviously, we do expect industry to grow, and hopefully, we should be able to maintain our growth rate what we have delivered in the first quarter.
The third point we wanted to understand, Sunil, was whether this move on GST, whether it fundamentally changes the whole roadmap of EV adoption. Because ICE vehicles suddenly get that much more affordable, right? So the propensity of just going in for an ICE becomes very direct. What's your thought on this?
Very difficult to say, honestly, because there is a section of a consumer which is preferring EV because of not only the cost differential, but also because of the cost of running, cost of operations, and maybe impact to environment, etc. A lot of regulations there now which are driving in terms of what vehicle you can drive on road, because we all know the pollutions have been spiking. There are various factors why people have been adopting for EV. Yes, this price reduction might impact a little bit, but we are in a very nascent way or nascent stage of the EV volumes. Two-wheeler is somewhere around 7 to 8%, three-wheeler is something around, four-wheeler is around 3 to 4% of overall volumes. We are very small and base, so it has to grow. Now, how much it will grow is time is only tell, and that's why we say we never normally sort of try and speculate what the penetration is going to be. But overall, long term, we still believe that the numbers where we are today will increase despite this, what you call the price differential being reducing.
Sunil, we leave it there. Good luck and, all the best as you continue to execute when what seems like a pretty good trajectory of growth for you. As you said, 12 new plants under construction. Growth over a long period of time. There'll be, of course, pulls and pushes and a little bit here, a little bit there, but seems to be on pretty good track. Thank you. That is Sunil Bohra of Minda with perspective on the business. 24